Hey traders, this is Ron Haidt. Hope you're having a great 4th of July weekend. As always, everything in this presentation is for educational purposes only. We'll kick off here. This is Thinkorswim, S&P 500 ETF, the spiders. Daily chart, we zoom in, we can see there's two lines. The 20-day EMA is in red, the 50-day SMA is in orange. We're above both. The daily outlook walking into this week is bullish. We held the 50-day, which is what I said to keep an eye on last week, and we just slowly grinded higher. With it being a holiday week and Friday we were closed here in the US in observance of the 4th of July Independence Day, there really was nothing to talk about. Everything I said in last week's video held, and we simply just bounced up. So I didn't do any videos midweek. Going into this week, again, I'll look to do it every other day unless just nothing is happening. Take a look at the Dow ETF, the diamonds. Zoom in here. I drew this little trend line in. We are starting to break it, but what's interesting here is both days we closed near the lows of the day. We gapped up, if I zoom in really close, we gapped up there. We did trade a little higher, but then we came all the way down here at the close. So there was selling into the rally. Then on, that was Wednesday, Thursday, we gapped up there, so it looked really good. And then we closed all the way back down here. Now that candle's still green because it's still a higher close than the previous day. But even though those candles are coming off their highs, because we're above the 20-day EMA in red, the 50-day SMA in orange, this guy is the big one. This is the institutional moving average. It's so important that we stay above that if you're a bull. This outlook is bullish too. The S&P does look a little stronger than the strongest of them all. All-time highs, Qs. They finished up a little, 0.68% on Thursday. Friday we were closed. We're not even getting below. We got below the 20-day just by pennies there. Pretty much we're right on it, and then we go right back up. So outlook for this week is bullish. Now earnings season is coming. If I bring up the calendar here, this is expiration week next week. We're going to have some companies reports. The banks are going to be reporting in here. Then we're going to start to see a whole lot of other companies those last 2 weeks of July. So we'll see what happens now that we've rallied. Let me actually take you to the S&P. Let's zoom in. Here was April's earnings season, right in here. And what happened? Blew right through the 50-day. Now we fast forward, we're in July. Are we going to keep pushing higher and ignore the bad news? Or are we going to just start now saying, you know what, we're going to start pulling back because consumers have less money to spend, too many people are still unemployed, etc. We'll just see what we get as these companies begin to report. You'll have individual stock volatility, but from the broad indexes, we're going to go focusing on that 50-day. We get below it as earnings season starts to happen. That's going to be a bad omen. All right, let's take a look at the VIX. If you're curious, the volatility index, we had that big spike when the Dow dropped over 1,000 points, almost 2,000 points, and all of a sudden we're right back down to where we were. Now there's a gap fill, interestingly enough, but this number is, the number is still high, relatively speaking, if you go back over the year or two at 27, but it's continually putting in lows off that one-day spike high. So that in itself is bullish for the equity markets. How goes Apple? So goes the market. Well, guess what? Apple's practically up there at all-time highs. It closed flat on Thursday. This is still bullish. Apple just does not get below its red line. When it does, we're immediately going to go to the 50-day. We get below the institutional line, that's when it goes on a sell signal on a broader basis. So the first sell signal is going to be the 20-day. That'll be a mini sell signal. The big one's the 50. Just look what happened over here. We lost the 20. Then once we lost the 50, that's when the bottom fell out. So we'll keep an eye on Apple. Let's take a look at some other stocks. Here's NVDA, a huge high flyer. Stock's almost doubled, and it didn't even sell off all that hard, all things considered, back in February and March. Sitting at 389, almost 400. It too can't get above or can't get below the red line. So if I was trading NVIDIA, and I would ask, if I was asking the question, where would be the first sign of trouble? Go right to the 20-day EMA. The reason I don't have the 8 days on here is we're still seeing individual volatility day to day, but the general direction is higher. I think right now in this market, a 20-day EMA is a little smoother, a little less whippy, less whipsaws. And look at, we just cannot get below it. So the first sign of trouble on NVIDIA, below the red line. At that point, I might consider some protective put option, not protective puts yet, getting ahead of myself. I would start considering maybe covered calls at or near the money, or at least get them going and start using covered calls. When we break the 50-day, that is a big one. That's where if I was trading stock, I might consider some long put options. Just as an example, from an educational perspective, here's Facebook. Facebook was in the news. Some advertisers were walking away. We broke down, got pretty much on just below the 50-day, and then it quickly reversed. We're right back up near these all-time highs. So this is still consolidation. There was an appetite for stock. Unfortunately, I think everyone is going to go back to Facebook. They can try to say no, but unless more do it, Facebook's probably going to still continue to do well until the advertising dollars start coming back due to a recession/depression that still is out there for us. Here is Amazon, probably one of the biggest winners out there. Amazon new all-time highs, almost $3,000 a share. Not even it. You know, you think about it. It had earnings back in January before the COVID crisis began. We got up to about 2,200. Then we went to 1,600. That's not that big of a dip. Okay, it's a $22 stock going to 16 if you drop 2 zeros. But then we go from 1,650 or so to nearly 3,000, almost a double. So they're the biggest winner with people staying at home. It too, though, red line. We can't even get below it. So the first sign of trouble on Amazon, below the red. Now what's interesting here is, even though Amazon has gone on this incredible run, the red and the orange aren't that far apart. And you might say, well, hey, they're like $170 apart. Yes, but that's, you know, we're talking about a $2,900 stock. If we chop off 2 zeros, it's just 26 to 25. That's not that far. So for here, I would get a little more cautious when it gets below the red line. But where would I get full-blown concern that Amazon might be entering into a correction? The orange, that 50-day, especially when they're so close. All right, how about pool? This stock has been amazing. The stock got caught in a sell-off, less discretionary spending, but there's enough folks staying home saying, all right, I'm not going to travel, I'm going to buy a pool. Stock goes from 170. Once we get above the 50-day, it has been a rocket ship. We have not closed below the 50 or the 20 since the stock was what? What was that close? 204.40. So let's say 205. We get close to the red, we get below it, but close back above it, and we just keep pushing higher. Watch the red line for initial concerns. Maybe short-term trades that are bullish would be exited, and that would be on whether it's Apple, NVDA, Facebook, Amazon. Stock doesn't matter. If I was trading short-term bullish trades, that red line, a closure below it, especially when it's been so great at acting as support, when we hit it, we bounce. We hit it, we bounce. We close below it, change in trader sentiment. That would be my exit for short-term trades. Where would I get concerned that maybe I want to use some protective put options? The 50-day. A break of the 50-day in orange. Here's Tesla. $1,228 was its peak. It closed at 1208. I had a question on this one. What would show signs this one is tired? Your guess is as good as mine, because whenever it seems to get tired, it just keeps going higher. I don't trade Tesla. That's not my type of trading style. But let's just say on Monday, there'd be a big gap down. Big enough gap that it creates an island reversal. That would be concerning. And I would say maybe the short-term high is in. But the way Tesla acts is maybe it just comes down, hits the red, and then it goes right back up again. All it's going to be is an indicator of a short-term top. Just be aware, though, if I try to use a red line, a 20-day EMA as a potential end-of-day trailing stop, by the time it gets below it, and I've said this in my previous video, we could be going from, what was that close? 778. By the time the next day happens, it's 679. It's nearly $100 drop. And now things would just be a little more exacerbated in terms of a dollar drop because we're so much higher. But that would be my line in the sand. Below the 20-day, the thing's in trouble technically. Here is NKLA. We talked about this one. I had some questions when the stock started going from 35 to 90 in a couple days. That was insanity. And remember I said, you got to go with something, maybe an 8-day, maybe a 10-day. The last line in the sand would be a 20-day. Well, we've closed below that finally on Friday. So any idea of being short-term bullish is now over. The target now, because this was such a huge move, is all the way down at the 50-day, which is what, 39? That's almost $20 lower, and the gap's down in that area too. And last but not least is gold. Getting a lot of questions on this. Gold is bullish. It did break the 50-day, which was noteworthy, and then we got right back above it. So that was another shakeout, fake out, if you will. But once we took out these highs, these horizontal highs, around 165, now we're just pushing up. What would I watch for to be a concern in gold? Look at the 20 and 50 again, they're very close together. We get below both of those. If volume were to spike, maybe then that's the top. Maybe then there's bearish trade ideas that would go to the top of the list. But until we at least get below both, like I said, it didn't work over here, and we were both moving averages were quite close, went right back up. The only thing missing from here was a big spike in volume. We did have an increase in volume, but it wasn't massive. So I would now want to see, okay, if we get below both, before I would consider being bearish, show me a lot of volume, way above average volume. Then maybe now I could believe that, all right, there's something left here in the tank for it to drop. Otherwise, we might just go back into a trading range, but gold is bullish on the daily chart. So that is it. I wish you guys a fantastic first full week of July. Again, I hope you're having a great 4th of July holiday weekend. And if things are calm, I may do one video this week. If things are very wild, I'll go back to every day. So I'll just let the market determine what I'm going to do. So again, wish you guys all the best. Take good care. See you in the next video.